Getting ready. Are you sitting at the edge of your seat? Are things okay by you? We've got a lot to talk about. Let's see what we can do financially so we can be the boss of your money. And here we go. Thank you for joining me. My name is Mitch Goldberg. I'm your host. This is my live stream show called Be the Boss of Your Money. It's about personal finance, investing, money. It's about taking charge of your financial life. It's about you becoming the boss of your money. It's very easy for your money to become the boss of you. To feel like you've lost control, to feel like you really don't know which end is up, and you get so busy in the daily grind that you don't have time to take that 30,000 feet, foot view and see what the big picture looks like and what you really need to do, move pieces around the board. That's what the show is all about. Inflation comes in red hot. Tesla continues to tumble. Coinbase gets absolutely crushed in aftermarket trading on earnings announcement. We've got a couple of things to talk about, and then we're going to take your questions. So while you're watching, if you do have any questions, certainly ask me in the comments. If you'd like to give it a like, celebration, heart, something, heart, please do so. That would help me see who's watching, and that's always a lot of fun. So here we go. Let's roll the quick intro. Hey, thank you for joining me. If you're just tuning in now, I'm Mitch Goldberg. You're watching Be the Boss of Your Money. It's my live stream show. I do this every Monday through Thursday at 4:30 p.m. It's your post-market show, quick wrap-up for the day's financial news, the markets. I don't just tell you how the market did. Big whoop, the market went up or down, whatever. I add a lot of perspective. I'm a financial advisor for 32 years now. And I've got a lot of perspective. I've seen so many situations come and go. I know the screen's a little blinky, but that'll go away pretty soon. This is what happens when I don't turn on all of my equipment a good 20, 30 minutes before I hit the live button. Why it does this, I don't know, but not really relevant. So let's just get right into the show, okay? The Dow finally has a down day. It was off over 200 points earlier today, which is no great shakes. People are like, oh, no, the Dow's down. That's it. We're going to give up this whole rally, this whole big thing, this whole rally, the whole October rally. We're going to give it all up. Here it goes. No, the dips are going to be shallow. I talked about this on the show like 2 months ago, a month ago or something. I said dips should continue to be shallow. And that's, continuing to happen. I don't expect that to change through the end of this year, because stocks that are up typically stay up into the end of the year. Stocks that are down typically stay down into the end of the year. Money managers who want to show that they had the big winners of the year, we typically buy them. It's called window dressing. And anyway, so whatever. The Dow was off by the end of the day, it was down 0.3%. I mean, it just goes to show you how little 100 points means on the Dow today. And we take a look at the NASDAQ, down 95 points. So down 0.6%. Yeah, down 0.5% or more in any of the benchmarks, in the major benchmarks. It definitely gets my attention, but it's not like a major concern for me, okay? Especially after the rally we've been enjoying. S&P off about 0.3%, down 16. Gold continues to move a little higher. We've been talking about this. Gold stays above 1,800. That's where the inflation starts to get factored in. I don't think it's really necessarily crypto is your sign of that inflation is here to stay. We'll talk about that in a moment, okay? Oil continues to go back to its annual high, back over 84, but the 10-year Treasury yield continues to plunge in spite of a really huge number in the producer price index that came out today. And the VIX had a big update yesterday, continues to move up a little bit today. VIX is almost 18. We see that hit 20, and we've got ourselves probably a minor correction, 5% or less. Okay. Let's just take a look at the NASDAQ 100 was down even more than that's the NASDAQ 100. That's even more a bigger concentration of stocks like Facebook, Tesla, Google, Amazon. Did I say Facebook? I meant Meta. I'm going to be calling Facebook Meta for a long time. Kind of like Alphabet. Like people are like, what's Alphabet? Alphabet is Google. Google changed your name to Alphabet, but we still call it Google. Okay, Russell 2000 down 0.63%. And let's take a look at, I want to look at the cryptos. Crypto, Bitcoin bouncing around. It's high. Bitcoin Cash is up nicely. See that Bitcoin Cash? There's Bitcoin Cash and Bitcoin because there was like a fork, like a split, and Bitcoin Cash just makes Bitcoin a little bit more usable for transactions. Okay. But I don't know if you saw this, but Tim Cook, CEO of Apple, the world's biggest company, came out and said he has some crypto and he's really into it and thinks it's very interesting. Other reports I've read said don't expect Apple to get involved with crypto anytime soon. But if Apple came out and said, we're moving like a tiny portion of our balance sheet, because Apple is so cash rich, we're moving a little bit of that money into crypto. I think you'd see crypto shoot from where it is like now, 67,000 on Bitcoin. Where would it go? Probably would get to 90,000 or 100,000 pretty quick. That's how powerful of a statement that could be. So let's move on. Ethereum continues to move higher, almost 5,000. Look at that. Ethereum, almost 5,000. You see that? See that right there? Just highlight it in blue. And Litecoin, Litecoin up 20% today. It's a big move. That's a very big move for Litecoin. Just people are really just piling in. And I want you to know, Dogecoin was off a penny. I want you to know this thing you're seeing right now in crypto. So I'm going to say two things. Crypto is not necessarily showing that there's crypto is not necessarily an inflation hedge. I think just more worldwide adoption of crypto generally as an asset class / store of value / place to make money continues to attract more and more people. Crypto is not just an American thing, like Americans are going gaga for it. Okay. In particular, Americans, let's say 40 and under. This is happening worldwide. This is happening in the Philippines. Okay. This is happening in Ukraine. This is happening in Africa. Everywhere people are plowing money into crypto. Now, the fact that everybody's plowing money into crypto makes more FOMO, fear of missing out. The higher it goes, the more people want in on it, and it becomes a self-feeding or self-fulfilling prophecy of going higher on massive waves of buyer enthusiasm. We'll see how it goes. I think, my own opinion is that pretty much every crypto you see today is not going to be will not be the crypto of the future. It's my opinion. And I know, the main cryptos are, you've got the top 10, certainly Bitcoin, Ethereum, Litecoin, XRP. There's a few that investors are betting will be the cryptos of the future, the ice cream of the future, Dippin' Dots, right? So we're talking cryptos of the future. But I remember if you had a portfolio of internet stocks, and you wanted the internet stocks of the future, in those portfolios were the companies you'd feel comfortable saying, yeah, that's going to be around for a long time. That meaning AOL, America Online, Yahoo, and so many others. Lycos, Excite, At Home. Where are they today? Google and Facebook didn't come out until years after the tech bubble burst in 2000. So we'll see. So That's two things. It's global enthusiasm, and it's people thinking that crypto could be an inflation hedge. Crypto is not necessarily an inflation hedge. I think it's just mass adoption of crypto, like I said, as an asset class, store of value, and place or thing to make money in. All right, let's move on. If you have any questions, by the way, you mind hitting me up in the comments. Let me know where you're watching from. That would be cool. I love hearing from you, and that to me is like the best part of doing this. Don't be shy, or just say hello. Say hey. Give a wave. I see Stacy is out there. Josh is out there. Josh, I know you called earlier today. I didn't actually even get into my office today until about 3:45 today. It's just one of these days of running around. And you know what really sucks right now? Well, it's great that you guys are here. What sucks is that I'm looking out the window and it's like it's dark outside. It's 4:45. I really hate that. It makes no sense to me. I hate it. Just whatever. I'm digressing. Let me pop myself back up here. Okay. What did I want to show you here? Why is this on my screen? I'm not even sure why this is on my screen. Tesla. All right. So, well, here's what I want to look at. Wholesale prices up 8.6% year over year, tied for the highest ever. And this is driven mostly by gasoline and the automobile sector. On the downside is like prices of meat and veal are down like 10% in the last month. Didn't mean my the check at the steakhouse was any lower, by the way. But price of a few things have dropped. But once auto manufacturing gets back to where it should be to meet demand, once we get the proper supply response, you'll see a lot of this stuff moderate, and that's why the 10-year Treasury is stubbornly at around 1.45%, regardless of all the other news people are seeing. I go by not the headlines. Like I know some people are like, oh, hey, inflation's crazy, or the infrastructure bill, that's going to be crazy, more inflation. But I'm going by the 10-year Treasury yield, and that to me is a much more indicator than being reactive. Okay, so let's see who's out there. Josh, I can't afford steak anymore. Call me back. LOL. I'll call you later, buddy. All right. So, consumer prices. This is a picture of Costco. I'll show you that. That's a picture of Costco. Okay. Consumer prices likely surged last month at their fastest pace in about 30 years. Okay. But, we get this, every time now inflation goes up, it's going to be the fastest in 30 years, because once you're at the fastest pace of inflation in 30 years, the hottest pace, then it's going to go up every time a new number comes in that's higher. That's the one that we feel. Producer prices go up. And then if manufacturers, producers, suppliers, if they could raise their prices to consumers, then those companies should be okay. If they can't, then companies start to get squeezed, their profit margins go down, and it causes problems for them. Either they reduce supply of what they're selling, or they look for costs to cut themselves. This creates a whole cycle. If companies need to cut costs, they start getting more into automation, doing more with fewer humans, that sort of thing. They look to source products from other parts of the world, or plastics, or whatever supplies they need. If they can pass it on to consumers, then good for them. Then their profit margins will be protected. Consumers will pay more. But if consumers get to the point where they're like, I'm just going to buy fewer things with the same amount of dollars that I have because, I can't afford to spend anymore, that's going to create demand destruction. And that's a whole other issue. And then with demand destruction, companies have to produce less, and that causes recessions. Okay, that's what that does. So consumer prices likely surged last month at their fastest pace in 30 years. I want to get into some stocks of the day. Okay. So we'll take a look at Tesla. Okay. Tesla was down $139 today, down 12%. So a lot of Johnny come latelys ran into Tesla. It's down to 1,020 in aftermarket trading, so down a few more bucks, down $3.42 aftermarket trading. It was as high as 1,200. Stock is still up like 44%, 45% on the year, so no one has anything to complain about. But when these stocks go parabolic and their moves, do something like this, okay, I'll make this a little bigger. Okay, you see this where it's parabolic? Let's say in the last 3 months of Tesla, it just goes straight up. That is the kind of move that pulls people in. Let's take a look at Ford. Ford, which hit I think a 10 or 20-year high yesterday, continues to hang above $20 a share, as you could see right there. Let's take a look at Coinbase. This is like a major ouch. Coinbase is down $40 after market. It was down even more before. Obviously the numbers were not quite as good either in the I think it was the trading volume maybe that wasn't as good. But Coinbase is down 41 in aftermarket trading, but PayPal, okay? PayPal was down $24 today, down 10.46%. My interpretation, and Robinhood has also been getting obliterated, and they also had like a major security breach. So if you have a Robinhood account, make sure you change your password again. But then again, if you have an account with Robinhood, you're in an abusive relationship. You just don't know it. And unfortunately, the person being abused is the last person to know. Okay. So just letting you know, if you want to ask me why, I'd be happy to tell you why. But if PayPal's down, Visa's coming down, Coinbase takes a hit, Robinhood takes a hit. And let's just take a look at how one more SoFi, okay, is doing. I'll put this on the screen. SoFi from 28 down to 21. These new ultra modern cutting edge DeFi companies, decentralized finance, or new financial services models, these have been getting these have been getting hit pretty hard as of late. And it's not just like an isolated event. It's happening more and more with more of these ultra modern new type of DeFi finance companies. And even though PayPal is now getting it, is into crypto and other areas, these stocks are still going down. It was like 6 months ago, any stock, any company in the world of finance, especially these newer finance companies, anytime they would say, we're getting into crypto, anything with crypto, the stock soared on that news. And now even though crypto is hitting all-time highs in terms of Bitcoin, Ethereum, the big ones, and the interest is there, these companies like Coinbase, which is, the marquee name when it comes to talking about trading crypto, these stocks are getting slammed. So maybe they've peaked for now, maybe not. Time will tell. But my point is, these companies as a group are going down. It's not just an isolated event like one company had a lousy earnings and revenues report or missed some kind of growth expectation, but that's okay. The rest of them are fine. It doesn't appear to be that way. And maybe investors are shifting their preferences away from these kinds of companies, which allow people to stay home and trade. Investors are shifting their preference to the reopening trade, people getting back outside. We had the big infrastructure bill making it through Congress. So infrastructure stocks have been up a lot. And some say infrastructure stocks are up too much. I do think some of the infrastructure stocks are up so much that they need a rest. we could talk about which ones privately. Okay, I don't want to come out and tell you one way or the other for an individual stock, especially if you're a long-term investor. Then you're probably not really, you know, worried about the next 5 or 10% move in a stock like Caterpillar. You're more concerned about its next 30 or 40% move up over the next 5 years or so. That's the difference. That's what makes you a long-term investor, right? So that's my story today. I will be heading out in a little while. I'm going to casino night for the Long Island Alzheimer's and Dementia Center. I'm actually on their real estate committee for this organization, but I'll be there tonight. I'll be playing some blackjack and hobnobbing and seeing some friends in person who I have not seen in person in like almost 2 years. So I'm really so pumped up to get to this. You can't even believe it. So it's going to turn into a hug fest. And what's cool is they said to get in, you either have to have proof of vaccine or proof of a negative COVID test that's no more than 48 hours old. I think that's really cool. So they're making everybody feel comfortable and safe, and that's cool with me. So I'm 100% cool with that, and it's cool. All right. Anything else? No, that's about it. I thank you for joining me. We've got some personal finance subjects coming up over the next couple of days, and I'll see you tomorrow. Thanks for tuning in.